people are still focused on the actual Bitcoin dominance. Like if the Bitcoin dominance is high, it's a great moment to step into altcoins. But are we actually in a market cycle where the Bitcoin dominance is relevant? Because it's just the opposite of Ethereum against Bitcoin. I think it's way more important to start focusing on the Ether dominance and start basing your decisions on that. We are switching towards an Ether cycle. And that is the most important.
Welcome to the GoldRepublic Podcast. My name is Bart Brands.
And I'm Alexei Jordanov. In our weekly podcast, we invite guests from all over the world to get valuable insights
into the emergence of a new monetary system through the lens of precious metals, cryptocurrencies, and other financial instruments.
Yeah, it's just pure speculation, and
in the end, it is
exactly. And Binance, and that's why we're still in the Wild West. Let's just admit it. Yeah. It's still the Wild West.
Free market action in the Wild.
Exactly.
It's funny.
It's still the freest market of all, right? If you want to say so. All right. So we touch about all these things, but there's another thing that I think would be very interesting is where are we going now? And
up or down?
Well, up or down.
At least to the right.
You're a very good forecaster.
Thank you.
You're a very good forecaster. I gotta say this. Either goes up or down. It didn't come up. I wouldn't have come to this conclusion by myself, I think. But now talking about the big boys in the crypto market cap league, Bitcoin and Ethereum. We've seen that Ethereum has gained some advantage when the metric that we look at here is the market cap dominance. Mm-hmm. And Bitcoin went from 72% to 41% within a year. So it's quite steep in terms of dominance. But we're also in the bull market, so that's also where a lot of other cryptos, not just Ethereum, take a bigger role in it because more liquidity falls into them. And that attract also, just like meme coins, more consumers or more users and traders into the market. So can we say that Ethereum can Ethereum flippen, meaning surpass or very close the gap to Bitcoin, in your opinion, in the next years to come?
I think so, yeah. I mean, Ethereum has adapted its protocol, so it became deflationary instead of inflationary, meaning that if it's being used a lot, then the protocol itself can become deflationary, which is another incentive for the price to actually start skyrocketing. So the market cap also raises in value. What we also see is that Ethereum is way stronger at this point in time than Bitcoin. So we might be in an Ethereum cycle in which the goal is not to outperform Bitcoin, but to outperform Ethereum, because that's actually the central topic or the central platform in the ecosystem of this bull cycle. So also, if you discuss about what is actually possible with Ethereum and Bitcoin, well, there's way more possible with Ethereum than with Bitcoin. We can't even use Bitcoin properly at this point still.
Well, you can Lightning and stuff, it works very well. I mean,
it does, but you cannot just use... Well, Ethereum also has gas fees issues right now.
It's highly dysfunctional, Ethereum.
That's true, that's why you've got all those other platforms stepping in. But Ethereum is the core layer of that entire ecosystem with the DEXs and stuff as well, and DeFi. So Ethereum is accelerating, and because of all the variables of being the actual central asset being used in the ecosystem becoming deflationary, we might see a flippening, and I think we will. And what we also will be seeing is that the dominance of Bitcoin will just continue dropping over time because of that ecosystem expanding.
Mm-hmm. And there goes as well the role. So Bitcoin as the digital gold and reserve asset, and then Ethereum as the smart contract platform, the computing, the decentralized computing platform, enabling all kinds of financial services.
Yes, but is Ethereum going to stay? We don't know. We're still too early.
And that's where the next phase in the cycle of that, what we talked about. So the phases of the bull one, we've seen Bitcoin leading the charge, and then it's always like a kind of delay follow-up kind of effect where then Ethereum then picks up, and then other contenders with lower market caps also start emerging, some dropping Like I think about IOTA was top 5, now it's like in the
EOS,
last
Litecoin,
EOS, exactly.
all
All of
those
those is just gone. They gone to
Ripple,
dust.
can't say Ripple,
Bitcoin
XRP.
Cash, yeah, XRP.
Oh yeah, that one, yeah.
All of that. So there's a
Memories.
constant fluctuation, but Bitcoin and Ethereum have, through the test of time, shown to be the most resilient and there to stay. But still, Ethereum is being chased by contenders, or at least not chased, but there's also fundamentally, and this is what we need to explain also to listeners and viewers, is Bitcoin and Ethereum are layer 1 solutions.
Yes.
And there's then a layer 2 solutions who build on top of those main infrastructure blockchain infrastructures. And there, if you want to also like explain a bit further the difference between the two, but those layer 2 solutions also came into a way of, one, create interoperability of going from one chain to another, but also to fix problems within some chains themselves, right? With, for example, Matic, which is now Polygon, or others like L1s, actually, that's contenders like of Ethereum, like Solana, Avalanche, AVAX, Atom, that you also like, Chainlink.
That's a little different one, but yeah.
Yeah, Atom is of course different, but they all basically are either L2s or L1s trying to solve problems of, let's say, what Ethereum, or in that case Bitcoin, are trying to solve in and of themselves.
Yeah, I think for the listeners it's quite complex to understand everything that we're saying, but Ethereum is just the first base, so it's the first internet, and on that we can build applications. So if you want to have a staking or lending platform like Aave, you can't build that out of nowhere. You have to use a platform that is actually having the ability of smart contracts to build on top of it. So Ethereum is that smart contract layer, and above that, Aave is using Ethereum for their own project. That is what layer 1, layer 2 in simplicity is right now. Like if you have an app that is built on iOS is the layer 1, and the app being built on it is the layer 2. Simple. But then we've had the issues with Ethereum having skyrocketing gas fees. So we couldn't be using Ethereum alone because of the fact that if everyone is using it, the gas fees are too high, so you can't use it anymore. That's where Solana, Avalanche, Polygon are stepping in as new layer 1s, trying to solve that issue of scaling issues with Ethereum of the gas fees. However, if we're going to build stronger on those platforms, they face the exact same problem at some point in time. Every platform will. And then there's another issue, which is if you are in the Polygon ecosystem and you've got the Avalanche ecosystem and you want to transfer it to one another, you can't do that. It was too complex to do because there are different ecosystems, different protocols. So what are built right now with layer 2s is that you can actually bridge between the two. You can make a transfer from the Avalanche ecosystem towards Matic, and just within one protocol, one button, it's being done for you. And that is what interoperability is doing. That's what Cosmos tries to do. And if we build that bridge through layer 2s, everything can connect with each other and everyone can use the platform that they want and build an actual decentralized ecosystem.
So how do you approach that in portfolio building? All of what you just said.
Because
we're talking about momentum and phases of the bull market, and as we, number one, how much more, like where in the bull market are we, and second, how do you build a portfolio based on what we just talked about?
Well, I guess like most of your portfolio should consist of Ethereum, and your goal is to actually outperform Ether. So at some point in time, you're actually comparing your other assets towards Ethereum, and you're going to time when Ethereum is done with its run, and then you swap towards other projects. But still, if you want to build a portfolio, it has to have Bitcoin. And then second, all those layer 1s, because the conclusion is still the same as a year ago. If the layer 1s are not going to work, your layer 2s will not work too. It's very simple. And you simply don't know which layer 1 will be the biggest. Probably it's going to be Ether, but we don't know if that's going to be solved with scaling issues. But the vast majority of your portfolio should consist of layer 1s.
Is there, because you said, well, ETH is, of course, it's huge.
Yeah.
It might even flip Bitcoin. That's a really, I think it's really important that you said that you actually think that it might flip Bitcoin. Or are you convinced it's going
How many
to
years?
flip?
Within a year.
Within a year.
Yeah. It's
Alright.
not too far. It's just a 2x. That's not too much, especially if it's becoming deflationary and DeFi is going to pick up again. And the question right now is, you touched the dominance topic. People are still focused on the actual Bitcoin dominance. Like, if the Bitcoin dominance is high, it's a great moment to step into altcoins. But are we actually in a market cycle where the Bitcoin dominance is relevant? Because it's just the opposite of Ethereum against Bitcoin. I think it's way more important to start focusing on the Ether dominance and start basing your decisions on that. Because if Ether is going to accelerate and that one starts to drop at some point, it is meaning that money flows from Ether towards other layer 2s or other platforms, instead of Bitcoin being the central tradable asset in the markets, which was the previous cycle in 2017, where every decision was based on the Bitcoin dominance. So we are switching towards an Ether cycle, and that is the most important switch that we are seeing, I guess.
So
And is there? Sorry, please continue.
No,
Oh, okay. Well, because I wanted to ask, you have these multiple layer ones, and you say, well, if you are building a portfolio, you gotta include these.
Mhm.
Is there? Do you see? Because you said, well, some of them might fail. We don't know which one is going to win. Isn't there space enough for all of them to not maybe get as big as Ethereum, but they get 50% of the ETH market cap, or I don't know, maybe 25.
That is still out for, like, if you look at internet in a way, there are few big players. So right now we are in a space where a ton of platforms are trying to achieve a market percentage. They want to be the market leader too. And at some point, one of them will break through and will become the big leader. And then we've got a few other ones hanging around. So in the end, I guess we will be having one big one and the rest just around it.
And that should be or could be ETH, or
You simply don't know.
no, of course you don't know, but is ETH, especially when it's going to flip Bitcoin, isn't that then aren't all the other ones maybe who comes in second?
Could be, but like Netscape also died down, and all those first internet browsers also died down. So Ethereum has the advantage of being the first one. However, it has so many big issues that we're currently in a market environment that they are losing dominance too, as AVAX, Solana, Matic, Luna. Luna is actually on Atom. But all those platforms have been accelerating in their dominance as well. So we are already getting in that discussion of, is Ethereum actually the big leader? Or is it losing momentum?
So ETH can flip Bitcoin, Matic can flip ETH,
Oh,
or AVAX, or Sol.
in the end, if
to flip or to be flipped?
that's true, the size of the actual Web 3.0 is probably why Ethereum is going to flip Bitcoin, the potential of it. However, most of the developers are currently still in the Ether ecosystem. When those slowly start to switch towards other platforms and those are actually solutions for the Ether issue, Ether will start losing value and the other ones start to rocket further upwards. But that is all about simplicity of usage of that platform instead of Ether. Right now, most of the developers are still within Ether ecosystem, and because of that, I think Ether will be the biggest. But maybe in 3 or 4 years from now, we have a different conclusion. We've already seen that different platforms are taking over dominance from Ether because it's unusable to do it on Ether in itself. So it's getting it. That's why it's getting a complex market right now, and that's why it's also getting way more interesting.
Yeah, and also the fact that, for example, I think plasma was also one of those things that Ethereum was planning on to do. I think it's been even put on hold, or the research hasn't been like. It's basically like child chains and power chains, which Polkadot basically. Gavin Wood, who was part of the Ethereum team, co-founders, recognized and built Polkadot on it. But and so Polkadot is also
That
one of
has limitations, having side chains instead of what Ethereum is building. It all has issues. It all has struggles. So then there's a new phase where a certain huge amount of adoption is taking place, which is bringing new problems. So it's always an adapting or developing market.
In the end, it will be about gluing this all together, and that let the ecosystem, just like a free market, find its basically ways of creating a symbiosis between all those different ecosystem and interoperability and all that, and go beyond just like the turf war of which coin appreciated the most and stuff like that. Because we still talk too much about price, but not enough about actual use case and impact on certain things, right? It's still a very greedy driven discussion or topic.
Yeah, it's like especially what you see in the media and stuff, it's all about prices, making more money in fiat instead of actually using crypto. And that's something that annoys me a lot. I would love to have a conversation about Ether or DeFi on TV instead of discussing why Elon Musk started tweeting about Dogecoin. But that is the case. We are still early in that sense.
But if you can open see, the prices of an NFT is not in dollars, and that's what actually at the beginning I think they changed from dollars to ETH, because people who just amass so much ETH wanted to spend in ETH and not in dollars. Right, because it's just like so much to spend, right? And that's already happening. That's like one of the three basic characteristics of money is being a unit of account, and it's already the case then for NFTs. And there's just one small application of it, but it is happening. So now we've talked about the different phase of this cycle, and we've already touched upon it twice. It's a recurrent topic. But when bear market? So first of all, we in our previous pre-conversation we said it's important to define first a bear market and the difference of the traditional definition of what the bear market is in the stock market and what it actually is in the crypto market.
Yeah, I mean the actual definition of a bear market is, as far as I know, if a market corrects more than 20%, it's already a bear market.
True.
And then you've got recession, depression, and that's the amount of quarters that it's actually going down.
Exactly.
So technically speaking, we are currently in a bear market of Bitcoin, and it's been dropping more than 20%. But it's all just a phrase, like bull bear market. It's funny that you're saying it, but how are you trading it? It doesn't make sense to name it. It makes sense to actually trade it or make investment decisions. So it's more about over or undervaluation of a certain asset at a certain point in time towards different assets or towards fiat. And then next to that, betting on a bear market is the most difficult one to do so. You can see the stock markets are currently running up for 11 years already. And people have been claiming the Great Depression since 2016. But we are still going up. So making that bet or deciding whether a bear market is going to happen is probably easiest to just still focus on your portfolio and adjust and swim and wave your portfolio through different assets. That at some point in time, if crypto is going to accelerate quite fast, irrelevant is whether we're going to have a bull bear market or where we are. It's just about the rebalancing your entire portfolio towards assets that have not been going up too much because the value of crypto is overvalued towards other assets. That's what the point is in the end. When are we going to get a bear market? I don't know.
What are your indicators?
Well,
like you usually, because you're holding and trading, so you make also money while trading, which is different than, let's say, in my case, I'm not trading. I'm occasionally trading when I see something where I feel I could be right, but NFTs. Usually I'm not.
Flipping NFTs?
No, not even. I'm not even into NFTs. Not yet. And in general, people don't want to hold their bag for too long of a bear market. And we also said that in the conversation that 20% in the stock market is not the same 20% in the crypto market, because the crypto market, it can be 20% in a day. And in the stock market, it's also not the same market size at all. than, let's say, crypto right now. It's still very small compared to what the stock market is. So 20% in 100 trillion is not the same as 20% in 2 trillion.
Plus, the impact of a crash on the stock market is way heavier towards the real economy than having a crash on crypto. So
yeah, precisely.
It's also, it's funny, if you look at the Fear and Greed Index, they've got it for the stock markets and for the crypto markets. And when crypto drops down by like 30 to 40%, Bitcoin, the Fear and Greed Index is numbered at 10 or 20. And it's a number between 0 and 100. If it's getting close to 100, people are getting greedy, based on social media sentiment and the prices. When it's close to 0, people are scared. So after a crash of 40% in crypto, the number is somewhere between 10 and 20. People are scared. But when you go to the stock market's Fear and Greed Index, when the stock markets drop 5%, people are scared as well. So the numbers are different in terms of percentages, but the impacts are kind of the same towards the investors. So that is, but then still, people in crypto are making decisions based on their emotions and what they see on social media. So that's why those swings are heavier, and that's why you see. It's funny that you see those similarities, but then the difference is that with a crash of 40% in crypto, people get scared. Well, if you have a 40% crash in stock markets, I think people will be crying heavily.
Yeah.
The world will end.
Yeah, probably. Yeah.
Yeah, that's actually true. When it comes to a possible bear market or where we are in this cycle, we will also want to talk risks, because the real economy, and of course crypto is very real. It has a very real impact on the lives of millions of people, including my own. But there are risks.
Mm-hmm.
And, we've talked in the Dutch interview about over-leveraged traders, and we talked briefly about it as well. But there are also other, they might be catalysts, like a default of Evergrande. Are there some of these indicators that are on your radar that you say, well, you have to keep your eye on those because that might impact the crypto space?
I think there are several, actually. Evergrande is definitely an example of what might bring the markets down. The impact of Evergrande to the Chinese economy is quite comparable to Lehman in the US as in 2008. So that is a sign. The markets are not crashing yet, but those signals are everywhere. Like there are 50 other companies doing the exact same as Evergrande. So probably they will be having some issues soon too. What you should be focused on is whether the interest rate or yields are going up. If the yields are going up, people are getting insecure about their own investments or about the government. So the yield on the government will go up, means more uncertainty. That has an impact on the mortgages and the mortgage rate. That has an impact on the real estate markets. That's a little bit too complex, but when the US is going to announce tapering or the shutting down the actual quantitative easing, what they are doing right now, that is going to be the trigger probably. And we have seen why the past few weeks that they have been discussing this already. It has a huge impact on the crypto markets. It also has a small impact on the equity markets. So if they are going to taper, which is narrowing the actual monetary policy, the dollar will shoot up and the rest will go down. That is probably the most primarily indicator that you should be watching, and the yields on government bonds, and things like common sense like Evergrande, but also if you see billboards everywhere about crypto and stock markets or stock trading, which we see nowadays, it is actually something to be cautious about.
Mm-hmm.
Yeah. So those are some of the indicators that you look for when you start thinking, well, maybe I should step on the side, hold a bit more in cash, diversify into other assets.
Yeah, that's the easier ones. You can also just use or focus data, as in if the housing prices are stagnating or renting prices are stagnating. That are also key indicators to look at. Okay, maybe the economy is slowing down, but just in an easy way, tapering and the yields and the interest rates, or just common sense like Evergrande, are things that you should be at least be sure for yourself that this game is not gonna continue for another 5 years. Maybe 1 or 2 years max, and then we're just reversing the market.
Okay,
So
so
building a cash position is also a position.
Yeah.
Not trading is also trading. It is maybe stupid, but being in cash in the crash is actually the best decision to have.
exactly.
Yeah.
What?
And I'm
Sorry.
And I'm curious also to see like the correlation between Bitcoin in general, because it's the biggest crypto asset, and the stock market, because we've seen increasingly like more and more correlation.
Mm-hmm. Yeah, I mean, it's not really the stock markets; it's the dollar. So it's funny if you really dive into the charts itself, and you're looking at the bear market that Bitcoin had in 2014. It was a period where the dollar was actually accelerating because they started Bernanke started tapering back in that period, or he wanted to implement that. It was a period where the stock markets were consolidating too, and the dollar was accelerating. Bitcoin didn't do well. 2018, Bitcoin bear market was a period where the dollar was accelerating quite fast. So those are also correlations that happen over time. And the funny story is we're getting institutional investors into the market, so the correlations will only increase. Macroeconomics will take a big chunk out of the trading that we have in Bitcoin. And that's why those should be taken into account if you want to invest and trade into crypto. That's why what we're seeing lately too, the dollar index is showing strength. We all know that the dollar is still having a huge amount of inflation, but that is showing strength, so it has an impact on Bitcoin, and it also has an impact on the equity markets.
Do you have a outlook for 2022? So pretty basic outlook for what's coming next year.
I think the ultimate question lies in the fact whether they are going to continue the monetary expansion. So we've had some discussions or like rumors from Jerome Powell in which he wanted to hike his interest rate, which is going to impact every market that we have. He wanted to accelerate tapering too, and he wants to start that in Q2 of 2022. I think that will be the key indicator where the markets are going to go to. If he delays that, we're going to have another bull year. Very simple. If we start tapering in that period, I think we're going to face bear market starting in...
So you would take more profits out, more cash positions, build up your cash positions and so on.
I'm personally already doing that, and I know more people who are doing that.
Oh, really? So you already are preparing for that?
Having cash is always a good decision to have.
Okay. So you are
It's
implicitly...
only depending how much of a percentage you have in your portfolio dedicated towards cash, and I'm currently just building it up because I just see every market is getting overheated, and then the question becomes: is a 2x going to make me more happy, or is a diminishing or like
50% drop down?
Yeah, is that going to hurt my life? Well, definitely it will. So that's why I'm building that cash position to just defend myself.
Yeah.
But I think tapering will be the core. The core and Corona and tapering will be the two core topics, and that's going to decide where the markets are going to go to.
Okay. Well,
Cool.
last question. When Lambo?
I don't buy a Lambo. If
All
you
right.
have class, you don't buy a Lambo.
Well, we knew you would answer it like that. All right. Michael, thank you very much for your time. It's been a really interesting conversation. As a last reminder, would you like to tell our audience more about what you do with your company?
So what we're doing with 8 Global is that what we're trying to achieve is that if you want to start into the cryptocurrency world, you come with us, you start with us, and you stay with us until you're done. So in every chapter of your cryptocurrency journey, you make mistakes, but we just want to be that one platform where you can get all the information that you need, whether you're a beginner or advanced, whether you are a retail trader with just $100 or a heavy investor with $1 million. We want to be that platform creating your content and assisting you everywhere in the journey. So that's
Why is it called 8?
Well, apparently Albert Einstein once said that the 8th world wonder is compound interest. We never know whether he said it or not. But that's compound interest, compound knowledge is our core value. So that's why we created, or we decided 8. 8 is also the lucky number in Asia. And global is just that we want to achieve this mission and vision all over the world.
Mm-hmm.
So
8 not because you're hungry.
Well, I'm kind of hungry right now.
All right. Well, then we're just going to eat. If you watched this video and you liked it, please feel free to give it a like. If you haven't subscribed to the YouTube channel yet, please do that because it really helps to spread our message. Alexei?
And if you're listening with those wonderful pair of ears, this podcast on any podcasting platform, you can also give us a rating because it helps us ranking. You can also share it to any person that you think this episode was interesting for. And see you and hear you or hear us
in the next episode of the Gold Republic Podcast.
God, that was bad.